Hello traders, hope you're doing well. Today we'll be discussing about a very powerful price action concept. Once you understand this concept, it will be very easy for you finding high probability trade opportunities both for intraday as well as swing trading. Okay, so let's start. Now we all know that to make consistent profit in the stock market, we need to trade when the market is trending. When the market is in uptrend, making higher lows and higher highs, we need to look for buying opportunity. When the market is making lower lows and lower high, we need to look for shorting opportunities. Moving along with the market helps us to achieve a target very quickly. Most of the time, a trade completes within 1 hour. Traders, you would have heard of support and resistance, right? Now, these price action traders use Trendline to find support and resistance level. Trendline is very powerful. Now, when the market is in uptrend, Trendline is marked from the below, which acts as support, and when the market is in downtrend, Trendline is drawn from the above, which acts as resistance. Now you can pick any chart and see this is what happens in the market. In any time frame, you will see Trendline acting as a dynamic support and resistance level. Knowing this is very important because we will try to take advantage of this market movement and find trading opportunity in the same direction of the market. Now let's say the market is currently in a downtrend. Now there are three important places where you can enter the trade as long as the downtrend is below the resistance level, this trend line. Okay, the first area where we can enter the trade is at the structure high, which is here. This is the best place to enter. Now the second area where you can enter the trade is at the midpoint. This is the area in the market where you are trying to enter little late, but still taking a trade at this location is okay. Now the third is at the later stage when the market is already moving. These are the only three places where we can take a trade in a trendy market. There's no other way. Okay, now with this example, I want you to understand this principle. As long as the price is trading below this trend line, you can take a sell position in any of these three key areas. Okay, but remember, each type of these entry will have different outcome in terms of risk reward and potential of trend reversal. So what I will do now is I will show you some live market example for each type of entry. Okay, now traders, this is a chart of Sun Pharma. Alright, we can see the stock is making low, high, higher low and higher high, right? And now the market has come down to this level. If I draw a trend line like this trend line will act as a strong support level. Now it doesn't matter if the trend line is wick to wick or body to body like this. Okay, as long as the trend line is below the key level, it doesn't matter. Alright, the key level is this and this. These three boxes what you see are the key levels because the market bounced back from these levels, right? Now the best time to enter the traders at this key levels after we get a confirmation. So what can be a confirmation? A confirmation can be a bullish candle, alright? Currently the market is taking support here, right? At this key level, any green candle confirmation, we will enter the trade, alright? Now let's see how the market goes. Now here we have got a bullish green candle which can act as a confirmation. We will enter the trade here. Our stop loss will be below the previous higher low. Okay, this was the previous higher low, right? We will mark this level and our stop loss has to be little lower than this. Okay, and our target will be 1:2 risk reward. People who want to exit the trade quickly can exit at previous high. Okay, but people who want more risk reward, they can exit the trade at 1:2 risk reward. So this is my 1:2 risk reward. Basically our entry was here. Our stop loss has to be below the higher low and our target can be 1:2 risk reward or previous higher high. Okay, now let's see how the market movement happens. Traders, here we can see our target got achieved here. After this the market went up. We don't care. We exit at 1:2 risk reward or this previous higher high level. So basically we exit here or 1:2 risk reward. So when you enter the trade during an uptrend at this level, This can be the best level where you get very good risk to reward. Alright, now traders, this is a forex chart of GBP and AUD. Alright, we can see that the market is making high, low, lower high, lower low and lower high. Right, so we clearly know the market is in downtrend. Right, now the best place to take trade opportunity is here or here, because these are the key levels. This will be the best place of entry. But in the stock market, we cannot always time our entry. Right, now what if we miss the trade opportunity here? The market went down and it reversed. Currently the market is at this level. You do not want to miss the opportunity. Can you enter here? Actually, it is not a bad decision to take a short position here. It might not be as good as taking here or here, but taking a position here is not at all a bad idea as long as you place your stop losses correctly. Now, if I'm planning to enter at this candle, I will enter here, but I have to make sure that I keep my stop loss above the previous swing. Now, this is the previous swing high, right? My stop loss has to be close to it, and my target can be this level, or when the market comes here I exit, or I exit at 1:2 risk reward. Now let's see in both the situation what happens. So I will change my risk reward to 1:2. Now let's see how the market moves. We can see that the market is taking support here. We achieved our target 1:2 risk reward, and our stop loss was at the right place. Now as long as the market do not break this trend line level, our stop loss will not get hit. The most important thing in this entire strategy is placing the stop losses, right? Does this mean this is 100% successful strategy? No, no strategy is 100% successful. There are chances when the market will come and hit your stop loss. But if you backtest the strategy and see, most of the time you will be able to achieve 1:2 risk reward. So basically when we lose less. When we win more. If we just follow a strategy with proper risk reward, that's more than enough to make consistent profit in the stock market. So this was our second type of entry, that is midway entry, which we take. Okay. Now let's see the third type of entry. Now traders, this is a chart of Bitcoin. Why Bitcoin? Because price action works with everything. That's the speciality of price action trading. The strategy which you learn in price action, you can use it in any market, because without price action, there is no movement in the chart, right? All this what you see here, it is price action. So this is a chart of Bitcoin, 5 minutes time frame. Okay, we can see the market rejected here, here and here. Let's say we were unable to enter here, right? This was the right place to enter, and we were unable to enter here because this is the midway. So we missed both the opportunity. Now the only option that we have is to enter here, right? But is it right to enter here? Because stop loss is too big. Actually, it's not a bad idea to enter here as well, because as long as the price is trading below this trend line, okay, and you properly place your stop loss without cheating the market, you will always get better risk to reward with the strategy, right? Now this is the previous swing high, right? So if I enter here, my stop loss has to be little above this, okay, and my target can be 1:2 risk reward or previous swing. But here I do not have any swing, right? So I have to go with 1:2 risk. So our entry is here, our stop loss is here, little above this level, and our risk to reward is 1:2, right? Now let's see how the market goes. Now traders, if you see, we achieved our target at this candle. Now the problem with the third type of entry is you need to wait for a long time. You had to wait so long to achieve your target. But still, as long as you're trading below the trend line and you have proper stop losses, there's no problem. We can enter the trade. Now remember, in all the three types of entry, as long as the market does not breach the trend line, we are safe to trade. Okay? And one more point, when the market rejects for the second time, I'll be interested to take a trade. Third time, yes. Fourth time, yes. But more than that, on a lower time frame, that's very difficult, because trend reversals can happen. So at maximum, stick to 3 to 4 times. Within that, if you don't get any trading opportunity, you can wait. The market will reverse after consolidation towards the uptrend. There you can find buying opportunity. Alright. I hope this video was useful for you. If yes, please like and subscribe to the channel. If you have any doubt about this, let me know in the comment section below. I'll be more than happy to help you. Alright, now that's all for this video. I'll see you in the next one.